Welcome back. So equity markets are pretty placid for at least the time being. Mid-cap index down 1.5%. Nifty is down about 0.75%. But in the commodities world, it's moving all over the place. So let's get a roundup in. We've got Manisha Gupta joining in. Manisha, now it's suddenly yield concerns, growth concerns that are coming through.
Brexit concerns. There's just no end to concerns when it comes to that. I mean, even after the G20 meeting where we did see some positive statements coming in, the concerns clearly continue in that part of the world as well. So yes, we are looking at the commodity prices reacting to that. On one side, you have the crude oil prices, which are down more than 2% in the Asian markets right now. But you really have to keep an eye on the gold prices because that has been quite volatile as well. And remember, all those reports which told you to start accumulating gold at sub 1200 levels. We have seen levels of 1240 plus in the New York session yesterday. Some bit of a bargain buying coming in right now. But that clearly are the initial reports forecasting gold for 2019. So whether it is Natixis, IHS or Goldman Sachs, they're all betting on the gold prices hitting $1,350 per ounce in the year 2019. The most bearish, of course, is Macquarie. 1219 as an average price in 2019 is what they're talking about. So clearly that one is the only odd one out. But everybody else expects the gold prices to cross above 1300. 1350 is the level that they're talking about. Kishore Narne of Motilal Oswal now joins us to talk more about that. Kishore, hi. You have been a bull for gold for some time now, giving accumulation advices for 2019, 2020 as well. And we really seem to be closing gold at around those levels for 2018. Inching towards that 1250 mark, which has been a target really. What is your sense right now? What really seems to be working in favor?
Yeah, good morning, Manisha. I'm sure you remember that we are one of the most early ones to predict that gold should be rallying significantly in the next couple of years. So I think, as you mentioned, there are a lot of concerns across the world. You name it, like right from Brexit to European yields as well as the US yields and the trade war. I don't think it's going to subside anytime soon. So I think that is going to be a driver for the gold prices. And gold is a very shallow and small market. Even a very small percentage of money which flows from either debt market or the equity markets towards gold, it causes a significant rally there. So that's the problem of shallow gold market. So I think in short term, yes, definitely there's a rally to come up. Maybe 1248 to 1252 is one thing. I think short term resistance there, so there could be a little bit of pause there. On domestic front, I think 31,150 is a short term target. Maybe if you're looking at next 3-4 days or a week kind of a thing. So even at current levels of 30,900, 30,850 are a good levels to buy with a 31,150 as a short term targets. But on a longer term side, as I mentioned earlier also, close to 40,000 is what we are looking at. So 30% is still upside left in gold prices.
30% upside in gold prices in how much timeline?
So we're looking at 18 to 24 months.
Okay. Kishore, also when we started 2018, I remember most of the banks had said that silver prices will outperform. And clearly, as we head towards the year end, the same banks have said that they have gone wrong in that call and have booked losses in silver in some sense. As we get into 2019, when you look at gold and silver and palladium, which is making record highs, and platinum, which hasn't done so much in that sector, how would you look at the overall sector?
I think in overall sector, as I said, platinum is something which has underperformed for quite some time, and I think that's going to catch up, and it's already started up. And silver is big time underperforming since last 4 years almost,
right.
As you know that once silver starts the catch-up game, then nobody is going to stop that. It's a big rapid
we're
move
all waiting for that,
which we can see. But the problem is because of the trade war, where we have the negative implications on the base metal and the overall industrial demand of silver, and the tariffs going to be hitting the major one of the largest consumers, that's the electronics industry, where a lot of tariff wars can be taking place. That's where actually we are seeing silver is not able to perform on the industrial demand side. But the investor demand is not kicking up right now, because even on gold, the investors are slow as they start to accumulate gold. and it starts move up around $1,300, then I see silver catching up. So it will be a slow lagger. But I think in the after let's say once the $1,300 mark is passed in gold, then the silver starts to trigger.
All right. Okay. So 1,300 is the level to watch out for in gold before you start accumulating silver.
Okay. All right, Kishore. Thanks very much for that, and thank you, Manisha, for getting us the roundup there.